No rate cut this month, but a very dovish Jerome Powell points to future rate cuts happening very, very soon. We're going to be discussing that, the latest tech earnings, and much more today on Money Never Sleeps. Thanks for joining us today, folks. As we get going, do us a favor, like, if you haven't yet, subscribe as well. Those two little buttons down there, they mean a lot. Remember that nothing that Kevin or I say is financial advice. We're just talking about the markets, the moves that we're making or not making. So please do your own research and maybe use this for a little bit of that before you make any buys or sells. Kevin, Jay Powell, he's still going, still continuing on with today's speech. The market responded favorably to it. The decision that there be no rate cut this month. However, he did open up by saying that there is a good chance, basically a good chance that September is the first month. They're going to keep looking at the totality of the data. There's that buzzword that we love so much. How are you feeling about things? I can guess the answer to that, but I want to hear it from your mouth first.
They should have cut months ago. That's pretty much my assessment right now. He's telling markets in so many words, but also not, that they want to make sure that they have inflation under control. But at the same time, I think they understand that they need to cut sooner than later. September most likely makes the most sense for them in their trajectory, right? I think they've done a really bad job of ignoring a lot of data that's critical to, seeing if the economy is slowing. For the most part, they continue to say that the economy is robust. How many revisions have we had in the past in several sectors of data that showed that the economy is actually weaker than initially reported? And that's the data that they're reporting on, that they're basically using to make their decisions. Several, and that's been going on for 12 months at least. I'm being generous there. So I think right now it's a bit of a pump fake from Jerome Powell, just to kind of show people that, hey, we did our job. We tried to get inflation down as much as we possibly can. If inflation comes back, then obviously we're not going to cut, but for the most part, I think we seem like we're in a pretty good place if the data comes back and it shows that the economy is cooling down to the point where we feel safe enough to make those cuts. Now, the problem is you need the economy to slow down in order to make those cuts. That's not a bullish sentiment for across the labor market. That's not bullish for liquidity. That's not bullish for collateral. There's a lot of things that come come hand in hand with rate cuts. And I think that's what the markets are kind of being fooled by right now. But at the same time, Jerome Powell is just not addressing those concerns. He's only addressing the concerns of, this number. This number means nothing compared to what the implications of it being moved one way or the other, as we'll talk about in Japan in a few seconds, means for the entire, U.S. economy, if not the entire global economy, because the U.S. economy right now seems to be the place where you put your money. It's the last stand, the final frontier for global liquidity.
Yeah, it's going to be fascinating. We've talked before about in the past when there have been rate cuts tends to lead to a correction in the market. Mm-hmm. And maybe that's going to be the same here as a sort of sell the news event. We've seen the buying happen today. Nvidia back up 12%, 12.5%. The only thing down really right now is Microsoft coming off of their weak earnings yesterday, but even that is only down, just under 1%. We're going to see earnings from Facebook, Samsung, MasterCard, Alibaba, and some other ones today. And then tomorrow, Apple and Amazon. So there's still a lot to happen. I'm not really too sure. I'm in the place that I want to be with my holdings and my position. So if it goes down in the short term, I'll just try to add on more to it. But Powell did seem rather upbeat today. That was my feeling on it. Seemed like not quite a sigh of relief, but he knows that we are moving to where he wants it to be. He kept referring to the PCE numbers, the headline of 2.5, the core number of 2.6, the fact that the job market is cooling off a little bit, that take-home pay, while still increasing, is not increasing more than expectation. So those are positives right there. September is going to be a big month. We have plenty of time between then and now. Still 2 more CPI prints, another PCE. We got a jobs report this week, jobs report next month that we'll see before they make their decision. So they asked about if they're looking at maybe cutting 50 basis points, and he seemed to shoot that down pretty quickly, but did note that once again, it'd be dependent on the data. Drink if you're playing that game along with us. So it's not off the table, but it does seem rather unlikely. The markets are pricing in, at least 25 basis points that we can see in the CME futures, 87.6% chance of a 25 basis point cut and about a 12% chance of a 50 basis point cut. So that is what the market is expecting. I'm looking at, seeing November and December now. And, by the end of the year, the highest probability is that we are down 75 basis points from the current position. So markets are getting excited. Will that lead to a sell-off, or are we going to see some of this liquidity that is sidelined move into more risk assets? Because there is, a lot of money. We're seeing the haves and the have-nots right now. A lot of people in the top, 1% have money sidelined and are ready to move it into the markets potentially. So could this be kind of a push and pull where it's not as drastic of a move? I know you don't think that's going to be the case. I kind of do. Let me get your thoughts on that, and then we can move into Japan, their rate decision, and how that is going to impact things as well.
I'll say this, and I'll put my balls to the wall. So I'm not going to say put my balls to the monitor right here. I think that we're going to get a financial crisis. I full out believe that we are going to see that. There's just some, again, I think about this logically, and then I think about it illogically, because this market's been very illogical for a period of time. We're betting on rate cuts after we've had a major correction since the October lows of 2022, and the market is very close to all-time highs. It's not at all-time highs. Obviously, we had that small correction recently, but for where we are currently, we're getting news that we're going to get rate cuts, and we're looking at the bond market right now. It seems like nobody wants bonds. Everybody wants the equity market. But when they cut those rates, that means the rates on those yields start to drop significantly. Well, people are going to flow money into those, right? Especially if there is some type of absolute chaos, right? Say this might be a perfect segue to get into Japan right now, and let's just do it. Bank of Japan right now, last night, raised rates to now they're at a quarter point, right? They're at 0.25% rates. The last time that they had raised rates, do you know what year it was?
1974.
Close, 2008. So
close.
Both bad years, but 2008 a little bit worse. And this was the last thing we needed, because in 1990, when they had raised rates, and this is the other time that they had raised rates, was in 1990. That speculation bubble brought them to the low all the way in 2008, and everything was the same. We had inflation increasing, we had the equity markets higher, we had the yen just losing value to the dollar nonstop from 89 into 90, and then they raised rates. And the 2 months that followed, I believe we lost 36% of the equity value in the Japanese markets. But now we know that the Bank of Japan, and they're not perfect by any means. I don't think that they're smart at all. When we look at what they're doing, they're printing yen and they're buying yen, which is their attempt to save the yen while keep the equity markets elevated. They own a shit ton of bonds in the market as well. So if they were to lose the value, that the Bank of Japan would be taking on those losses, no one necessarily else would. So now we have to think, what are they going to do? Well, they know that the U.S. is probably going to cut rates soon. Do we think that they're going to sell off some of that debt before then? We have to question that. They did raise rates before the U.S. is cut. So now we have to see if they do offload some of that debt. Does that save them? Does that make the yen stronger against other equities and a lot more people start buying Japanese bonds? Maybe. But with that comes also the downfall of the U.S., because the U.S. needs that debt to operate the U.S. government. I mean, we're seeing Janet Yellen, who's doing crazy QE today. She issued $30 billion worth of treasuries, I believe at the long end of the curve, as opposed to the $15 billion. So that's why you're seeing a little bit of a pump today in the markets. People are able to take that, use that as collateral, buy stuff in the market. Eventually, that collateral is going to dry up, especially if nobody wants it. Everyone wants equities. Japan doesn't want those bonds, that U.S. debt. They're going to put that right into their own economy, save their yen. You're going to see the equity market in the U.S. absolutely pull back as it tries to find some type of gain, which by the point they might get to, it might be a 3% on a 2-year or something like that. This is a game of liquidity that's about to dry up. I think August is going to be a shit month, and I think September is going to be catastrophic for the Fed if August proves to be a really bad month for debt and liquidity just drying up. If that's the case, I don't think the 50 basis points is off the table. I think that they're going to be forced to cut more or less in September because of what's coming. Maybe I'm wrong on timing, but I do think that we are very close to this point because the things are starting to line up how history has in the past. He says history doesn't repeat itself, but it often rhymes. This is this is probably as close as it can possibly be to a yen carry disaster as it has been in the past. And I think that we're pretty much past the point of no return with Japan and the US markets and their correlation.
All right. Very well said there. I'm watching the markets as we speak. Crypto is taking a little bit of a nosedive at the minute. We've seen a bit of a sell-off here. Bitcoin under 66K, moving into the oversold territory. So want to see how that, where that goes as the market wraps up here in the next 33 minutes. And then shortly thereafter, what happens with Meta. Big earnings right there. We saw Microsoft in the after hours. Everything was getting destroyed last night. And I think this dovish tone from Powell and the no rate movement is definitely assisting that, currently down. I think at one point in the after hours, it was under 400 a share. So it took like a 7-8% nosedive. Like I said, NVIDIA, if you want to take a look at that, bouncing back today, we got news that Pelosi bought another like $1.3 million worth of it. So a big purchase by Nancy over there.
That was a few days ago too, right? That was the 26th. So she bought around, let's give her the benefit of the doubt, being the best trader in the world. We'll give her the low that day. We'll say she bought it at 111 for NVIDIA. So she's up, solid amount compared to today. But at the same time, I think I sent it to you in house last night too. NVIDIA insiders continue to sell, and they were selling all the way down to 100 yesterday. We have to really question what's going on here. Are people trying to make a bit of a scalp trade here with NVIDIA? Is this kind of like a bounce, like a dead cat bounce, where the 50 moving average is going to remain resistance? Kind of seems like it right now when we look at this wick. We're literally on the 50 moving average right now. See how this closes today. But we're in where we expected a correction when you push down this deep. But the weird thing is where the support came in. It came in right in the middle of this. That makes no sense whatsoever. If you were going to look at support, you would have thought that the 107 would have held, or you would have found support down here at 96. Where it held right here, I'm pretty sure someone was just like, let's not do this today. There's more selling pressure than there's buying pressure. Let's put a little bit of money in there. Let's make some money to the upside and see if we can get a bit of a scalp trade. I think the Nancy Pelosi news kind of helped a lot of people, especially retail, get excited and get back into it. So then maybe that's what pushed up the price a little bit more today. Seems like people have been copying her trades ever since they realized how much fucking money she's able to make on some of those trades because she's very successful.
Successful. You hear Dave Portnoy on his daily day trading show talk about how he's just gonna copy what Nancy does, and so you got the barstool people who fancy themselves traders. They're gonna follow it too. It leads to a very weird dynamic in the market.
We'll say this though, this is where she did buy before 126. Now she's buying a little bit lower at 111. You have to wonder how much can NVIDIA push up? Could it push up a little bit higher? Yeah, absolutely. It could fill this gap right here, right? It could go to like 126. I think that's the major gap that it's missing. Could go to like 122. She might just be kind of like bringing her average down as well. She might be building position. But you can't assume that everyone's always right? That's the thing that you have to understand. Like, she's very successful, but she could be wrong. Like something could just absolutely happen where someone bigger than her that plays with a lot more money in the markets just is like, what, we're actually deep fucked because Japan just sold off a ton of US debt. And now we can see that they're going through a fire sale. Guess what? Let me offload everything I have. NVIDIA and the BOJ and the carry trade are heavily correlated, right? We know that there's a lot of Japanese banks that have NVIDIA stock. They also have a lot of stock of ARM. We know which two banks those are, by the way. I'm not going to mention them, but they are ones that if anything were to happen, they're probably going to sell off the equities that are printing the most amount of money. We have to remember $1 trillion worth of NVIDIA's market cap has been erased since the top. 440 billion, I believe, was added today though alone, which is fucking crazy. But these things are getting really, really weird around this area, right? This is a very critical level. It broke through the key support. On the retest of that, who knows? Maybe it bounces down and then pushes up again. We close some of these gaps. It's possible, but it really comes down to buyers and sellers. If there are more selling pressure than buyers at a certain level, you could throw kind of your structures out the window, especially if people need cash, right? And you can pull up Microsoft right here. Microsoft went all the way down to the 200 moving average in the after hours yesterday. We actually lost it, but guess what? Today's a different day, right? It's kind of funny how you see the post market, how it trades, and then you see where it is, the next day. It's a bit of a squeeze because people say, you know what, the 200, let's buy it there. That it's going to be support. I mean, I think it went as low as 398 or so, and people held it. And today, obviously, it's down a little bit. Obviously, it barely beat earnings. I think it was like what was it, by like 5 cents or something like that? The estimated stock share price that they were hoping, and then what was it? I think their cloud revenue was down. So it was like they barely beat, kind of missed, but you saw how violent that push to the downside was. That's going to mean a lot for Meta. And who's the other one that's reporting the next 2 days? Amazon and Apple.
Amazon,
It's
Apple are tomorrow.
Yeah. So I mean, if Meta has a bad day, I mean, I still think that it's very possible we could end up at this earnings gap here. Not saying it's going to go there in one day. I think over time it could, just because there's a very little support. I mean, this little support you have here from April, if that chooses not to hold, the 200 chooses not to hold, then you have to find support. Support here is at 407. Best case scenario, they kicked ass because everyone likes Zuck's new cut and he's wearing 2 gold chains. We're looking at the top of this parallel channel, 548, or at least the 50 moving average at 487. So those are kind of the targets we're looking at. It's going to be interesting to see how tech responds, especially after Powell's. Today's such a volatile day because you have Powell speaking, and then you also have earnings. So he could say one thing, but then earnings could say something completely different, right? And it could show, there's actually more panic than maybe even Powell is letting on. So I think when push comes to shove, the earnings are probably going to be the one that move the market for the next few days. Maybe there's more of a squeeze. Who knows? But I think that the earnings are more important than what Powell has to say here, and just in my opinion.
All right, let's go ahead. Where do you want to head to crypto next, or is there any other charts in TradFi or the Asian markets that you want to look at?
We could let me pull up the S&P and then we could go right into crypto.
Okay.
Crypto has been boring until today. Literally today it decides to move a little bit, but the S&P, this is one thing that I'm kind of charting, and again, I expect this to be in a corrective phase. And when we look at the S&P, obviously this is a massive move to the upside. It's 5 waves, which kind of includes starts from right around here, 2020. So this is a 4-year 5-way move to the upside. It's a very weird structure, but when I'm looking at this here, I'm looking for an ABC, and what I'm seeing is like an ABC, something like this, right? It's a big structure, and within this first wave, we have 5. Within this B wave, we have 3 waves, and then 5, right, 5 down. And I'm looking up here, and I think we have our wave 1. I think that the 50 moving average test was our wave 1, so I'm expecting our 3-wave move to come in somewhere around here. So I went to the low of this at the origin, 5385. We shot all the way up to about 54.90. We came down once again to about 54, and then we're kind of pushing up here, and we see that we filled this gap right here perfectly at 55.53, and it seems like we're running out of steam for the trading day so far itself. Now, this could be worse than an ABC. This could be a 5-way move to the upside, and we fill this gap up here. We get that extension to about 5,600. Doesn't have to happen, but I'm open to it. But I'm looking at just the structure here in itself. We have 5 down, 3 up. I would anticipate another 5 down. That's why I'm staying very bearish going into August, because I think that the 5 waves that we see after that is consistently below the 50 moving average. And even though you have some support here, I think there is going to be some good selling pressure if you lose that. We have to remember that the markets are based on algorithms and machine positioning itself. So if price gets below a certain level, the machines will just sell until it gets to a level where it thinks that maybe this is a good opportunity to buy. But they can also turn off those machines to the point where it's like, you know what, risk off, just keep selling on the way down, see if you can make money. It really does come down to the algorithms in this trading market. And that's why it's so hard sometimes to bet against the market, because you will get beat out by the machines every single time. And it really just comes down to who's faster. They are every single time. So if you get to a point where it starts closing below a key level, and then you see, you know, a 2% drop or something like that below that, these machines are going to sell off. And, you know, a violent move from what we've already had here to what we have here, and people are taking profits. You have a push down here, it's going to move fairly fast. So just looking at this, what I'm anticipating in the future would be something like this, you know, 5-wave move, maybe a 3 like that, and then some type of extension down to the 200 moving average. And then again, we would have another 3 waves and then 5 waves, which brings out the bottom of that A wave. I think it's very possible we could see 1,200 points in the S&P or so be lost in that entire 5-wave moves in the first wave. Not great, but you know, that would be more in line with something like a financial crisis or a huge sell-off in debt, which causes equities to absolutely plunge. So that's just something that we have to keep an eye on for the S&P.
Here's something else we might need to keep an eye on. I just saw this happened right around when we started recording. Let me pull it up.
Is it foreign affairs?
Yeah.
Yeah.
Supreme leader of Iran has ordered the Iranian armed forces to launch a direct strike against Israel. Yeah. So, you know, the fuck they doing over there?
Greatest meme ever.
Not great. Not great when it comes to escalating conflicts. Don't really love seeing that. So,
right. And markets hate conflict like that. And here's the thing too.
Unless it's, you know, the oil market or defense, like they love that shit. So
100%.
What's oil doing right? I'm curious. What's oil doing right now? I want to take a look.
I'm gonna call bullshit on the oil trade.
Up big. Ooh, look. All right. I need to.
I'm still calling bullshit on the oil trade.
I want to pull this up and look at like the 15-minute chart here. Yeah. So it's at
4% today. I mean, that's massive.
Yeah, like that's a big move up. It's really overbought, but who the hell knows for how long that could be? I mean,
we also have to think about Venezuela too, right? Venezuela's oil. So it's going to be complicated with that. I'm going to still call bullshit on it. I think a good spike, a good squeeze, because so many people are short here, totally makes sense. But I think that we are going to see demand absolutely get crushed for oil. That's my opinion. But I think right now, being bullish isn't the worst thing.
Yeah. You absolutely know for a fact here in the next few weeks, we're going to get a report of someone in Congress or the Senate who bought, Lockheed or some other defense shares like minutes before that strike was announced. Like you just know we're going to hear it because that's just how shit works around here and nothing's going to change. Okay, sorry. I took us off one path. Let's veer back onto where we were before.
Let's go to crypto.
Let's head to crypto. Let's look at Bitcoin, seeing the dominance starting to dip a little bit, heading right over 56, price just under 66K. So a lot of volatility today. We saw it get up back to, sorry, I'm still on my 15-minute chart, but we saw crypto get as high as 66.6. We saw it get as low as 65.6. So it's kind of been pretty swingy today.
Yeah, if we want to look at this since March, it's a very choppy market, right? It's just between the two ranges, 60,000, 73, let's say. I mean, we can even argue and say just like about 70,000 or so has been the good swing range. So if you were trading this market back and forth, you've had wonderful opportunities. Now we're getting to a point at the end where we lost that level of support. We broke through it, right? And again, we're probably going to see a death cross with the 50 and the 200 if we kept on closing below the 200. Here is just the weird part. I think it's still possible we can go up a little bit more. Saw that 70,000 was pretty good fucking level of resistance, and I'm kind of in the mood for this market where support and resistance are more important than necessarily I would say maybe how people are positioned in terms of shorts and longs, because again, I think liquidity is something that liquidity and leverage are two things that people are very much just like dismissing and underestimating in this market. And I think both of those in conjunction can just throw this market one way or the other. But you're still above the 50 moving average. That's not bearish necessarily. If you start testing and you start losing it, then maybe we have a different conversation. We're looking at where the price could go. Again, I'm not playing with this market. As far as I'm concerned, I'm going to say that the height is going to be 73, 74 around there to be pushing up to. And if the low right now for where it's going to test would probably be the 50 moving average at 64.39 or 64.34, my bad. So between those two ranges is where we could go. Obviously it's getting over it's going to be pretty oversold on the daily fairly soon. But then again, if you want to look at, we can take a look at the weekly. It looks like there's still plenty of room to the upside. Maybe that gets us up there, but we're seeing these wicks keep coming down, down, down. I just don't know when this is going to decide to make or break one way or the other. I do think it comes in conjunction with TradFi or some major news events where it decides which way it wants to go, and it's probably going to make its way in one way or the other pretty violently, right? Either we're going to have a one green candle or maybe two green candles that take us up to like that 74, 75 level, or we're just going to have one massive red candle that takes us down to like 52, 51 again. So very volatile times. I'm looking at USDT dominance as well. This signifies that we're probably going to push up a little bit higher in Bitcoin's price, and it's probably going to come down to this bottom of this line. That's still a theory that we are kind of open to right now. Does it have to happen? No. Again, very similar to NVIDIA. Does NVIDIA have to correct to all-time highs? I saw people buying 185 strike prices for calls today. Think about market cap. But does that have to happen? No, it doesn't. And same thing with USDT dominance. It doesn't have to check that bottom line. Something could happen and the price just reacts quickly. We use Elliott wave theory because it's good at predicting behavior in markets when things are trading somewhat normally. Sometimes you don't get that opportunity and you get a really weird structure because something just comes out, or everyone just decides to sell at one time. You get those flash crashes like we got in April, May, actually I should say like May of 2021, and even summer of last year, right, when we got that Evergrande one that crashed in August of 2023. So there's a lot of things that could just fuck up structure, and I'm open to that right now too, because we just have to be recognize that this is a very dangerous market to be trading. I think that we just have to look at support and resistance. 50 moving average, like I said, and then we got to look at the highs so far as where we're just kind of trading in between, because Bitcoin, for the most part, if we look at this over the past 3 or 4 months, it's trading within a range. There's nothing to signify that it's going to break from that range right now or in 2-3 weeks. But again, we do know where we stand when we look at this on the monthly chart, right? It's kind of ugly. Let me get rid of this ABC right here. When you're putting in lower lows and lower highs, usually that would break to the upside. But to me, what this looks like is that the price is just being distributed up at this level. I mean, if we look at this in terms of Bitcoin's history, this is the longest it's been distributing for a period of time over a certain level. You usually get a wick up, wick down, but when we look at this in the monthly, this is just telling us that people are trading back and forth. I think it's just changing a lot of hands from people who have a lot of Bitcoin to people who are willing to buy a lot of Bitcoin at this price. So that's just one theory, one thing that we're looking at. If you look at something like ETH is still pretty much underperforming, in my opinion, after the ETF. Is there something that's going to push ETH up? I don't know. We're still between the 50 and the 200. I mean, this looks like a parallel channel. This breaks to the downside, you're probably going to death cross on Ethereum, and that would be kind of in line with what we anticipate for alts, right? Last one, total three. Total three looks like it's getting that bounce right before we got the death cross. It's got to keep holding the 50 moving average. I was charting this out that we have one pullback and then we push up for another move, and then we start to see the decline. But again, anything can happen. 50 moving average is key. Support doesn't hold that, then you're probably testing the 200, which likely if the 50 doesn't hold right here, $22 billion above where the 200 is, 200 is likely not going to hold, and you're looking for support somewhere around 535 once again. So that's all I got on the crypto front. Is there anything else we should take a look at, or do you want to wrap it up there today?
I think that's good. Me personally, as not someone who's not as active of a trader as Kevin, my strategy is still just continue to accumulate Bitcoin here and there at these prices. I'm less confident in Ethereum than I was recently. I still think Solana is a good DCA target as well. But for me, the primary target at this point is adding more Bitcoin. I may not buy it at the bottom, but I think I'm going to buy it at a price that is less than where it'll be, a year, 2 years, 5 years from now. So if you're not super active in the market, once again, not financial advice, I think setting that Bitcoin DCA is a good idea.
Bitcoin.
Cut some of that other bullshit that you don't need to spend money on, right? And grab a little Bitcoin.
I will say this about Bitcoin. I'm not a Bitcoin maxi. I'm not any of that shit. I buy it because I want to make money. I don't buy it because I'm like, oh, this is the future, right? I just want to be putting my money and having my wealth grow. I think Bitcoin is going to be part of my biggest portfolio, the biggest part of my portfolio when I get the chance to buy it, because I do think it's going to be a lot cheaper when I do buy it. And the reason I'm doing that is because look where Bitcoin was from 2020. I mean, not 2020, 2023 January to where it went to, again, crazy mania phase, what have you. But I do think that regardless of price action, people continue to come back to Bitcoin. Institutions are coming back to Bitcoin. You hold to Bitcoin right now, you're still doing pretty good in this market, right? So it's just kind of like thinking like that long term and just having I guess not the gambling mentality to just go all in on altcoins or shit coins. Even when the prices are cheap and you think that you're going to make a 30 billion, I think for me, it's going to be more low risk, high reward options when it comes to not meme coins, but crypto that's not Bitcoin, and then high conviction with Bitcoin, where I allocate more, I think, of my funds to that.
All right. That is how we are going to end it today. Appreciate everybody for joining us. I don't think we're going to have a show on Friday. Kevin's working, and I'm taking my kid to the zoo. So I'm going to go hang out with him and see some animals. But we will be back on Monday. So keep an eye out for that. Turn the notifications on. Kevin will tweet it out. I'll tweet it out. But we're going to be back on Monday to talk through earnings, job report, look at the week ahead. Last day of the month here, we're going to see some it looks like things are pretty calm to end the day, but I don't think that's going to last too long. So thanks everybody for joining us. Once again, if you haven't, subscribe, drop a comment, share us out on social media if you're so inclined. Appreciate you all for being here today. Stay safe in the markets, and we'll see you next week.
Take care, everyone.